Good morning and welcome back to Almus Market Mornings. Just when we thought that we were hoping for some progress on the diplomatic front, Trump turned up the heat once again. After accusing that Iran was dragging out the peace talks, the US military launched some strikes on multiple targets in Iran for the second day straight. This signaling the tensions are moving in the opposite direction of a ceasefire. But Trump's comments overnight were amongst his strongest yet, suggesting that patience is running thin and keeping the investors on edge for now. And at the same time, we got a major inflation update from US as the headline CPI accelerated to 4.2%, driven largely by the higher energy prices linked to the Iran conflict, while core inflation came softer than expected. Despite that, markets are still pricing in a possibility of a Fed rate hike by the end of the year, showing that inflation concerns remain very much alive. Good morning, JK. What do you think is the bigger risk for the markets right now?
Good morning, Eshan. Uh, I think we have risks, of course, on both all the fronts because suddenly we are in a situation where one cannot totally rule out further escalation in the Iran war. And on the other side, we have inflation rising across, putting more weightage to expectation of interest rate hike by the Fed down the year, although not next week, and yields are rising. The commodities are slumping. So there is a sense of very risk-averse market as of now. Dow yesterday fell more than 900 points, and Nasdaq also followed with about 350 points down as well. So, of course, amid all this, we have the SpaceX IPO, which is now being valued at 1.8 trillion, four times already oversubscribed. So liquidity is also being drained out in the face of this IPO. So we don't have a very what can we say? We don't have a very benign atmosphere. Definitely, markets are remaining quite cautious. So in the last 24 hours, headlines from the war front have been very discomforting. Trump, told that there could be more severe attacks on Iran, and Iran also said that they are closing the Hormuz for passage of any vehicles. And not just statements, there are reports that there have been clashes at sea between Iranian and US forces also. Defense Secretary US said US will bomb key facilities in Iran. So these are, not comforting headlines. So oil once again had a jump towards $96 on the Brent, and of course not touching the 100. Very tentative at this point of time. News from the oil supplies is also not encouraging. Oil output by OPEC in May hit its lowest level in 2 decades. So the obviously so far whatever we have been getting as supplies are out of the inventories already existing, to the extent that the ships were allowed to pass through the Strait of Hormuz. So one shudders to think, if the war continues and the strait remains closed and there is no production as well, so what's may impact on oil prices. So I think it's very critical that we get some sort of a resolution to this conflict in the coming weeks. Otherwise, I think we are going to be in a very tough situation as far as the markets are concerned. We have started to look at central bank decisions. Yesterday, the first of the major central banks, Canada, took a decision to maintain the policy rate at 2.5%, 2.25%. This is the fifth consecutive meeting where they held the rates unchanged. So far, they have not seen a broad-based pass-through of the higher energy prices to other consumer prices. However, they remain vigilant. Now, we have the European Central Bank, which is meeting today, and they are expected to hike interest rate by 0.25%. Unlike Fed, the ECB has a single mandate, that is to maintain inflation. That comes first priority for ECB. So inflation already rising to 3.2% on the headline, and then 2.5% to the core is not something that ECB can live with. So in fact, this may be the start of a series of rate hikes by ECB. We can have at least one more, and if the war situation and oil prices do not see relief, we can see another mostly three rate hikes as well. So a very hawkish ECB approach will be seen. To what extent this supports the euro, that is something we have to see, because as they hike the rate, the growth also is likely to get impacted, and because there is a possibility that the eurozone can slip into the recession as well. Of course, we have more important central bank meetings next week with the Fed and BOJ as well. Now, the CPI number, coming to CPI number, 0.2% core print on a month-on-month basis might have given some sort of a comfort, but it is very difficult to remain sit back, relax on that, because there are some volatile factors which contributed to some sort of a down move on the month-on-month basis. But on a headline inflation, if you see, it increased to 4.2%, and that's something. Although the market had expected, crossing 4% is not something that the Fed should be comfortable with. So the CPI on the the PPI number, which is ahead today, is also going to be a hot number, following a similar number last month. So all in all, Fed is now more and more moving towards a hawkish space. Perhaps the rate hike will come as early as October if everything else remains the same. Most Fed members are favoring a hawkish approach to the rates. On the currency space, we have divergent moves. The yen has been weakening steadily towards a level where last time Bank of Japan was seen intervening, but it still stays closer to 160.5. No action has been seen by Japan central bank. But next week they are definitely likely to raise rates by 0.25%. Now, there is a chance that if they do hike by more than 0.25%, then Japanese yen will react by strengthening. But if they stick to 0.25% and no further action in the market is seen, then we could well see the yen on a gradual weakening path, because the rate hike of 0.25% has been well discounted as well. So on the euro, supported by ECB rate hikes, otherwise overall dollar has been strong. Commodity currencies have taken a hit on their chin, with most of the commodities slumping. Precious metals taking the lead. The gold almost hit $4,000 in Asian time today. Silver has been holding up above $62. But even at $62, it is 50% from the peak of 121 that we had seen. So overall, there is a liquidation of assets that is being seen. Dollar demand coming due to one of the major IPOs, as well as a possibility that US interest rates or yields are going to stay higher, and EM currencies are on the weaker side as well. On the dollar rupee, while we have stayed in the range, yesterday was a much narrower range between 20 and 50. But this range may not stay too long. If there is an escalation, further escalation, the oil price crosses 100, we might well see revisit to 96 levels. However, market is also focused on estimating the kind of flows that we are likely to get due to the government and RBI measures. Currently, market is abuzz with expectation that the FCNR-B related flows are getting possibly going to get a huge response, and we could well have nearly 40 to 50 billion on this front alone. Then, of course, we have the ECB relaxed norms, as well as the FII flow for bonds which attract no tax now on the profits as well as on the interest that they earn. So eventually those flows will come once the market, bond market in the global scenario eases. So all in all, there is a sense of uncertainty as far as where the currencies are, eventually going to move. Rupee, perhaps some bias for strengthening in the near months, and dollar will have to obviously wait for the FOMC decision. Maybe 101 can be seen if the current trend continues in the near term, but I don't think that will be broken. Thank you.
Thank you, Jairam. So, and just to summarize, the yields are rising and commodities are crashing. So, a sense of uncertainty still persists in the market. But the war headlines have been discomforting, signaling that more attacks and the Strait of Hormuz being closed again, which made oil jump to $96 on the Brent. So, the future impact of oil is very critical as of now. So, it's essential to see if we get a positive ending to the war soon. And a quick update from central banks that the Bank of Canada decided to maintain rates for the fifth consecutive meeting in a row. And we have the ECB meeting today with an expectation of 2.5% rate hike as their inflation concerns are still on the rise. But a divergent move is being seen in currencies as the yen is still near the older intervention levels, but no action is seen yet. So we will see the update on the same next week in the Bank of Japan meeting, and the euro staying support due to the rate hike today, but dollar in general seems strong. And we also have the precious metals slumping with gold almost near the 4,000 levels and silver holding up 62. When it comes to USDINR, we may still see a move towards 96 as the oil prices don't seem in a contained space right now. But a sense of uncertainty and waiting still stays, as we have to wait and see whether the FI flows enter with respect to the new RBI regulations. Thank you all so much for listening, and we'll catch up tomorrow with the fresh round of updates. Thank you.